Hi everyone, welcome back to our auditing class. I hope you have already watched part 1 where I explained the paper pattern, the marking structure and the overview of the auditing. If you haven't seen that yet, I recommend watching it first because that will give you a basic idea of how questions are asked and how you should prepare for the subject. Once you are clear with that, this class will make much more sense. Okay, so evolution of we will start with the sixth module. Okay, sixth module, and in that unit 6.1 nature, scope, objective and significance of auditing. And you can see here evolution of auditing, and many of you might feel confused, do we have to remember all of these things? Let me tell you, no, you don't have to study all of that. That's just a introductory background for your exam purpose and practical understanding. That's not very important. So we are going to that and directly focus on the core idea of what auditing actually means. Okay, so now let's start from the very root, the word audit. Okay, the word audit is derived from the Latin word which means to hear. Okay, back in olden days, people didn't maintain formal written accounts. Okay, the way we do now. So auditors were people who would literally sit and listen to someone explain their financial transactions, and they would hear the accounts and ask questions and give an opinion. That's how the word audit is originated. But of course, that was in ancient time. Today, the meaning and scope of audit have changed completely. Now, auditing is professional, systematic, and well documented process. It means auditing means uh, auditing is an investigation of financial statement to form a report based on the examined evidence. Now, it means examining the records of the business or an organization to check whether everything is accurate, legal, and reliable. Okay, now let's first understand the narrow perspective. In earlier days, and still in many cases, auditing was understood mainly as checking of financial records. That means auditor's job was to verify whether uh, the profit and loss account and the balance sheet and other statement were correctly prepared. They would check whether the company's financial position is shown truthfully and whether there are any mistakes or frauds in the books. So, in the narrow view, the focus was only on the financial side, only the numbers and whether they are right or wrong. You can remember this as the traditional or old school way of auditing. Okay, so traditional way of auditing is only just to check whether the company's financial position is shown truthfully and whether there are any mistakes or frauds in the books of accounts. Okay, now let's talk about broader perspective, which is modern and current approach. Today, auditing is not limited to the financial checking. Okay, financial checking, it also looking at how organization is functioning. Okay, how internal systems are working, whether it is following proper procedures, and whether everything is being done efficiently. This means that auditor doesn't just check account, they also check the management system, and they also check the internal control and the decision making process, and also they check the overall performance of the organization. So you can see auditing today has a much wider role. It helps the organization to improve itself, become better, transparent, and helps to take better decisions. Okay, so in a narrow perspective, auditing is just investigation of financial statements to form a report based on the examined evidence. Whereas in a broader perspective, auditing involves financial and non-financial aspects of an organization, which means the auditor does not just check the accounts, they also check the management system, internal control, and also involved in decision making process, and also in the overall performance of an organization. Okay, It evaluates overall efficiency and effectiveness, includes financial operation assessment, and aims for transparency and accountability, and helps in the better decision making. Okay, now that we have understood the meaning and perspective of auditing, let's go one step further and talk about the essential features of auditing. Okay, now the first important feature is verification and evaluation. Now, auditing is not just about looking at numbers, right? It goes deeper. In auditing, we don't just see whether something is written or not. We verify that whether it is true, and we have to evaluate whether the information make any sense. For example, if a company ABC sold goods worth rupees 10 lakh, okay, now the auditor checked the bill, check the delivery records, check the bank entries, and evaluate whether it is genuinely recorded and supported with proper evidence. Okay, next point is, the point is assess reliability of documents and vouchers and explanation. Okay, next point is analytical and investigate. That means the auditor does not blindly follow what is given in the books. They analyze the data, they look for the patterns, they look unusual changes or anything that doesn't look right. Okay, if something seems suspicious, they go deeper, they investigate. For example, if suddenly expense have doubled in a month, okay, expense has become 2000 in 20,000, okay, in normally the business have 10,000 as expense, suddenly the expense have doubled in a month without reason. The auditor will investigate why that happened. So auditing requires a questioning mind and the ability to study the records carefully. Okay, that is critical review, accounting systems, and internal controls. Okay, the third feature is covers all information. Okay, covers all information. It includes both financial and non-financial data, and it is a standardized approach. It follows a set of accounting and auditing standards. This means that auditor do not work randomly or differently. There are rules, procedures, and standards. They must follow that, like auditing standards given by the professional bodies like ICAI in India. These standards ensure that auditing is done in a systematic and professional way. Okay, it includes proper planning, checking, documentation, and reporting. Next is independent and qualified auditor. The auditing must always be done by the qualified and independent auditor. That is, the auditor must have proper training, knowledge, and professional qualification. Okay, just anyone cannot do an audit. Also, the auditor must be independent, which means they should not be influenced by the company's management or by any personal interest. Okay, they should be neutral, fair, and honest while giving their opinion. Okay, independence is a must for the audit to be trusted. So it requires professional competence, it requires professional qualification and objectivity. Last point is ensure reliability. One of the most important feature is that auditing is to be done to ensure reliability. At the end of the auditor gives an opinion, and that opinion helps everyone who reads the financial statement to trust them. Okay, whether it is a shareholders, government, banks, or investors, they rely on the auditor's report to believe the company's records whether they are correct or not. So the main goal of the auditing is to create trust and reliability in the financial information. So the auditor has to confirm whether the financial statement is accurate and fairness. Okay, so remember, auditing is not about just checking. It's about verifying, analyzing, following proper standards, being done by a qualified and independent person. And the most important is giving confidence that the records are reliable. Okay, this now next topic is nature of auditing. Okay. Nature of auditing means what are important features or the real nature of auditing. What exactly an audit does. Okay. The first point is verification of financial statement. See, the first thing what an auditor do is to check whether the financial statement like balance sheet, profit and loss are properly made or not. Okay, like whether they follow correct rules or not. And we call them reporting frameworks. So the auditor check if the company has made the financial report correctly or not. It ensures the financial reports align with reporting frameworks. Now, second point, examination of accounting data. The auditor does not just look at the final accounts. He also checks the data behind it. That means he will see bills, vouchers, entries and all that to make sure that the data is correct and reliable. Okay, it should not be fake or wrong. It assess accuracy and reliability through evidence and evaluation. Okay, it assess the accuracy through what? Through evidence. Okay, next is use of internal and external evidence. Now auditor takes help from different types of evidence. Some are internal like records from the company itself, like invoice, vouchers, registers, and also some external like confirmation from banks, debtors, or may from experts like valuers. Okay, so both inside and outside proofs is checked. Now it reviews record, vouchers, confirmation, and experts' opinion. The now this is interesting. Auditing is not about financial accounts. It also includes many other things like cost audit, checking whether the company is following the rules, also performance audit. Performance audit means how well the company is doing its operation. So the scope is now much broader. Okay, expanded scope. It includes compliance, cost record, operational and performance audit. Now the fifth point is systematic and independent. Audit is not done randomly. It done in a proper step by step method, and the auditor must be independent. That means he should not be under any pressure from the company. He should be neutral and honest while doing the audit. Okay, involves unbiased examination and professional judgment. Okay, now last point is analytical and investigate. Last, auditor should not only match numbers like calculator. He should think logically. Okay, if something look suspicious, he should investigate it. So the auditing is not just checking. It is also smart thinking and finding out if something is wrong. It goes beyond mechanical verification to logical evaluation. Okay. Now next topic is what is accounting and the difference between accounting and auditing. One important thing is that in auditing basics there are so many differences like accounting versus auditing, audit versus investigation, internal audit versus external audit, or statutory audit versus management audit, and many more. Okay, from the exam point of view, one difference is definitely asked in every question paper. So don't just study one or two. you have to study all the difference properly, okay, because examiner can ask anyone and it will come for 7 marks, okay. Now even if it looks small, don't skip, prepare all of them properly so that in exam you can attempt the question easily and get full 7 marks, okay. Now coming to our topic, the difference between accounting and auditing. So what is accounting? Accounting means making the accounts, like writing, recording, preparing profit and loss, balance sheet, etc. Okay, it means collection, classification, summarization of data for the preparation of books of accounts and to make financial statements. So accounting means making accounts, like writing, recording, preparing profit and loss and balance sheet, etc. Now what is auditing? Auditing means checking those accounts, okay, checking those accounts which we have prepared, whether they are correct or not. Now next is accounting is done when the transaction happens, okay. It is recording of transaction at the time of occurrence, okay. It is accounting is done when the transaction happens. Now auditing is done after the accounts are prepared, okay, after the accounts are prepared. And third one is accounting shows the business position, that is how much profit, how much loss, okay. It means the business events in the monetary terms and records them and communicate the financial result, like whether there is a profit or loss. Now coming to auditing, audit gives a report whether all this is done in proper and fairly, okay. Auditing reviews financial records to form an opinion, okay. It gives a report whether they are done properly and fairly. Next is, it is the primary responsibility of the management towards the shareholders or owners to maintain the financial records in such a manner that financial statement can be prepared from the books. That is, it is the responsibility of the management towards whom? Towards shareholders, to maintain all the financial records like balance sheet, profit. So it is the responsibility of the management to prepare the financial statement so that the financial report can be prepared using this financial statement, okay. Now the auditor is an independent person appointed by the business entity to review the financial statement, okay. Here the responsibility of the management is to prepare the financial statement. Then the auditor is an independent person which is appointed by the business entity. For what? For reviewing this financial statement. So accountant does not give any report, whereas auditor gives written report with his opinion, like whether the prepared financial statement by the accountant is true or fair, okay. Now accountant works for management, okay, whereas auditor is an independent person who works for whom? Who works for owners or shareholders, okay. Now no such liability is there in accounting, okay. No liability is there in accounting, that is accountant has no liability to outsiders, whereas auditor can be held responsible to shareholders and others too, okay. Now small firms may skip accounting, it is not compulsory for them, but auditing is compulsory under many law, especially for companies, okay. Now ninth point is accounting is done as per Indian standards, Indian accounting standards, whereas auditing is done as per the principle set by standard on accounting. So next is the difference between audit and investigation. So audit is an independent systematic examination of the evidence underlying the accounting or other data to ascertain the true and fair view of the financial statement of an enterprise. It means that audit is like a regular checkup, okay, regular checkup of company's accounts, and the auditor check whether the financial statement shows true and fair view. that is the auditor has to follow some fixed standards and guidelines, and it does in every year. Okay, whereas investigation may be defined as an examination of accounts and records within a view to ascertain if any fact for some special purpose. Okay, that is, investigation is like a detective work. It is done only when there is a doubt or for a specific purpose. Like if someone says there is a fraud, or if a company wants to buy another company and they want to check the background, so here they go deep to find out the truth. So this is investigation. The scope of the audit is very wide, has a wide scope. Okay, that means checking the accounts as per the rules, standards, laws, etc. Whereas investigation is limited as per the period or areas to be covered. Okay, and it is only for a specific part, so its scope is very limited. Now the next point is objective. Audit wants to confirm that are the accounts correct or do they follow the all rules. So in audit, the accounts and records are verified as to their truth and fairness, whereas in investigation is for a special purpose. Like investigation wants to find something. Was there any fraud? What went wrong and who did it? Okay, like that. Whereas the next thing is audit procedures. The audit is conducted as per auditing principles, whereas investigation involve an extended auditing procedure. Okay, it does not follow in any fixed method. The investigator use any method that helps him to find the truth. Okay, next point is evidence. An auditor will evaluate the accounting records predominantly based on the persuasive evidence. That is, auditor depends mostly on persuasive evidence, meaning enough proof to believe something is correct. Okay. Whereas an investigator looks for a solid, strong evidence, because he has to confirm or catch something specific. So he confirmed that it is a strong evidence, whereas auditor just mostly depends on persuasive evidence. Next is approach. Auditor is skeptical and not suspicious. Auditor is little doubtful but not suspicious. He checks everything normally. Whereas an investigator starts with suspicious and collect evidence to either confirm the suspicion. That is, investigator starts with suspicions like something is wrong, let's find it. Okay, so they collect the evidence and confirm that whether this suspicion is right or wrong. Okay, next is periodicity. Periodicity means audit is done every year. It is a routine exercise, whereas investigation is done only when needed, maybe once in 5 years or once in a lifetime. Okay, now next point is scope of auditing. Next topic is scope of auditing. The first point is initially limited. In the beginning, that is in ancient times, audit was only done to check whether the cash is handled properly or not. That's it. But now audit has become a full-time job. It covers everything like income, expense, assets, liabilities, tax, laws, frauds, everything. So scope was limited before, but now it becomes wide and detailed. Okay, the scope was narrow in ancient times but has expanded significantly. Next topic is determining factors. Determining factors means audit is governed by either by engagement terms or legislation or by ICAI. That means they have to decide who decide that auditor will check what. So it is decided by either by engagement terms. Engagement terms means agreement between the client and auditor. Okay, and next is legislation as per laws, and either by ICAI. ICAI means Institute of Chartered Accountants of India. Now, third one is comprehensive examination. Comprehensive examination means the auditor cannot say that this point was not mentioned in the letter, so I didn't check. He has to check all the relevant aspects of the financials, even if it is not clearly written in his agreement. That's why audit is not a shortcut job. It needs full attention. So auditor must review all the relevant aspects even if it is not explicitly mentioned. Okay. Now fourth point is legal compliance. Like the engagement terms cannot restrict audit scope when the legislation or ICI guidelines requires broader coverage. That means if the client says like, sir, you just check the cash and leave the rest, the auditor cannot blindly agree with that, because the law says that you have to check everything. Then the auditor must do full audit even the client doesn't ask that for. Okay, so in shortcut, we have to prioritize law. Now next is scope of audit. So the next topic is scope of audit as per SA 200. So now remember, SA 200 is one of the most important standard on auditing, and it tells us what exactly an auditor is supposed to do when he starts the audit. Okay, so the first point is assessment of information. The first job of an auditor is to check whether all the financial records are reliable or not, which means all the entries are accurate, all the figures are matching, is everything recorded properly. So the auditor has to check all these things. Okay, so here he uses two types of procedure, that is evaluates the reliability and sufficiency of accounting records using two, that is one is compliance procedures and other is substantive procedure. So compliance procedure means he checks the company's accounting system and internal control, whereas substantive procedure means here it is a detailed checking. He directly checks transactions like invoice, bill, bank statement, etc. to see whether the figures are correct and nothing is fake or nothing is missing. So testing accuracy, authenticity, completeness of records. Now next point is financial statement disclosure. The auditor also has to check whether the company is following all the accounting rules like generally accepted accounting principles, accounting standards and Companies Act. Okay, so basically he sees whether the company is showing everything properly in the balance sheet as per the accounting standards and Companies Act or generally accepted accounting principle. That means no hiding, no manipulation. Okay, and third point is judgment and materiality. That is auditor does not have to check each and every single rupee. That is impossible. Okay, instead he focus on important and big items, those which affect the financial position, and this is called materiality. Materiality means what? Which affects the financial position. Okay, and focus on significant transaction which affect the organization's financial position. Okay, that's it. Now, next topic is basic principles of audit, which is very important. Okay, first point is integrity and independence. That is, auditor should be honest and unbiased and free from, not influenced by anyone. Okay, he should not try to please the client or government. He must give his own fair opinion. Okay, next point is confidentiality. Client's information must remain private unless legally required. That is, whatever the auditor see, bank details, loans, profits, secrets, any secret, he must stay private. Okay, only if the law requires he can disclose something. Next, third point is competence. That is, audit should be conducted by a skilled professional. Audit should be done by a qualified, trained and skilled professional. Okay, and fourth point is supervision. If the audit is done by a team, The head auditor must supervise the work. Okay, audit is responsible for reviewing the delegated work, and it means he should check, review and guide the team properly. He is fully responsible. Next, fifth point is documentation. Documentation, all working papers, notes, calculation, everything must be properly maintained. Okay, because if tomorrow someone asks, how did you give this opinion, the auditor should be able to show the proof. So maintain proper working papers as audit evidence. Next is planning. Understand the client's business to design audit procedures. Before starting the audit, the auditor should understand the client's business and then make the proper plan. Okay. Seventh point is audit evidence. Auditor should collect sufficient and appropriate evidence to support his opinion, like invoice, bill, agreement, confirmation, etc. Without proof, no judgment or opinion. Okay. Obtain sufficient and appropriate evidence. And eighth point is internal control. Internal control, assess accounting system and controls. That is, auditor must also check the company's internal system. Internal system like how bills are approved, who check the cash, are the passwords and checks in the place. This tells whether the company is controlling risk properly or not. Okay. Next is reporting. That is, finally the auditor gives his report, whether the financial statements are true and fair or not. This report is the final result of all checking, verifying, reviewing and analyzing. So issue an appropriate audit report based on the findings. Okay. Now next topic is objective of auditing. First point is reasonable assurance. It means ensure financial statements are free from material misstatement, that is fraud or error, and comply with financial reporting standards. That is, auditor try his best to make sure that financial statements are free from material misstatement. That is, whether there is any fraud or mistake, and check whether they follow the proper accounting standards and financial report. Okay. Next point is reporting. That is, after checking everything, the auditor has to give a proper report, audit report. That report says whether the company's financial statement are showing a true and fair view. Okay. So express an opinion on financial statement and communicate the findings as per auditing standards. Now next topic is primary and secondary objective of auditing. The primary objective is to ensure the financial statement provide true and fair view of the financial position and performance of a business. Okay, the main aim of an audit is to check whether the financial statement are true or fair. Okay, the secondary objective is to detect the frauds and errors. If the auditor finds any fraud or error while checking, he will report that. That's not his main job, but if he finds something wrong, he cannot ignore it. Okay. So detect frauds and errors in the financial records and report material misstatement if found. Now, social objective of auditing. While fulfilling its primary and secondary objectives, an audit also serves certain social objectives. What are the social objectives? Protecting the shareholders' interest, preventing tax evasion, saves the company from capital erosion. Okay. Capital erosion means money loss. Okay. Next is ensuring fair returns for the investors, maintaining reasonable prices for the customers, ensure fair wages, compensation, fair wages for the workers, complying with corporate social responsibility rules. So in simple words, audit is not just about accounts. It's about building trust in the entire system. Okay. The next is significance of auditing. First, legal perspective. Audit is not just about checking. It's legally accepted and trusted. Accepted by tax and sales authorities. Tax and sales authority. That is, when the government comes for tax audit, They trust audit reports given by the auditor. Okay. Next is facilitate loan approval and ensures claims. That is, bank or insurance companies also ask for the audited accounts. Okay. And third one is aids in bankruptcy and insolvency cases. That is, when a business is closing or going bankrupt, the court relies on the audited statement. So from the legal side, audit gives your business a kind of official seal of trust. Okay. Next is internal control perspective. Now think from inside the company. Why is audit useful internally? To detect frauds and errors early. Okay. Ensures the employee accountability, because people know their work will be checked, so they will be accountable. Provides management insight, like it will give a management like what is working, what need to be fixed. Okay. And also maintain consistency in financial record. Now from the external perspective, now let's step outside. How does audit help outsiders? That it simplifies account settlement and business valuation. It helps in settling the accounts and valuing the business, like during mergers or takeovers of the business. Okay. It helps to predict the future trend, helps to assess the future business trends by showing past financial patterns. Next topic is advantages of audit. First, it protects the stakeholders' interest. It acts as a wall against the frauds and errors, and it keeps employee honest and records accurate. Okay, employees maintain accurate records. Next is helps the government in tax audit. Also identify the wastage and helps in correction, identifying the wastage and losses and enabling corrective actions. Next, helps in business reconstructing, aids in corporate reconstructing and valuation. Next, trusted by banks and institution, required by the banks, financial institution and government. Helps the settle partner dispute smoothly. That is, if there is any dispute between the partners, it helps to settle them fast. Okay. Helps in smooth settlement of partners accounts and preventing dispute. Okay, now there is some limitations of an audit. Detection limitation. That is, audit does not guarantee the identification of material misstatement due to test-based approach, persuasive rather than conclusive audit evidence, internal control limitations such as management override. That is, audit can't guarantee to catch each and every single fraud or mistake. Why? Because it works on test basis. It doesn't check each and every entry. Okay, it works on test basis and it relies on the evidence. Not all evidence is fully confident and foolproof. Okay. Next is people can override controls or hide things cleverly. So detection limitation. Next is professional skepticism. That is, professional judgment. Auditor has to use his own judgment, and sometimes even honest judgment can go wrong. So always remember, audit reduce the risk but it doesn't make it zero. Auditor must remain alert to risk of frauds or errors, questioning unusual transaction and assessing the reliability of management representation. Next is materiality consideration. Auditor judges materiality based on the financial impact. That is, auditor doesn't check every single rupee. It is not practical. So he only checks those transactions or items which are important or significant, and which influence the decisions of the users like shareholders, banks, tax authorities, etc. So this is called what? Materiality. Okay, material items are those which are big or important enough to affect someone's opinion or decision. So the next is classification of auditing. First one is organization structure wise classification. Structure wise classification is divided into statutory audit and non-statutory audit. Let me check the difference. So statutory audit, legal compulsion. It is compulsory. Okay, compulsory by law, like Companies Act and Income Tax Act. It is voluntary. It is not required by law. Company does it by the choice. Next is qualification of auditor. Scope. It is decided by the law. Okay, scope of the audit, statutory audit is decided by the law, and here it is decided by the employer or management. And qualification of auditor, auditor must have a required professional qualification. Now specific qualification is required. Next is powers, rights and duties. Here powers, rights and duties and responsibilities are fixed by the law, and in non-statutory audit it is between the auditor and the firm decides. Okay, next is independence. Auditor must be independent. Okay, auditor has an independence in status and in mental attitude. Auditor may not be fully independent since management hires. Okay, next is auditor responsibility. Auditor is legally responsible under Companies Act 2013 or any applicable law. Auditor is liable only under Contract Act. Okay, contract law. Now publication of audit report. Report is made public, is published for public, and here report is kept internally only for the management or for the owner. So audit report is made known to the employees or partners. Next is object wise classification. Here first is internal audit and second one is independent financial audit. Internal audit, it is defined by Institute of Chartered Accountant of India. Internal audit is an independent management function that continuously assesses an entity's operations. Its primary aim is to enhance government risk management and internal control. It is done by the company itself, maybe by its own employees or someone they hire. The main aim is to help the management, like improving system, checking whether people are following the rules or not. It's like your own security camera to catch problems before they go out. Okay, so it is more about control, efficiency and improvement. You can just read this. Next is independent financial audit, which is done externally qualified chartered accountant who is not connected with the company. Okay, this is mandatory for many company under law like Companies Act. Its main aim is to check whether the company's financial statements are true and fair, and then give a company report to shareholders or public. So this is a compulsory and it is for outsiders like shareholders and banks. Okay, next is periodicity wise classification. Periodical and final audit, interim audit, continuous audit and limited review. The first one is periodical or final audit. Final audit is conducted at the end of the accounting year after the books of accounts have been closed. Okay, final audit is also called periodical audit, and which is done after the books of accounts are closed for the whole year, and is done only at once at the end of the accounting period. Okay, now the next is interim audit. Interim audit is done in the middle of the year, that is in between two annual audits for a specific period. That is, it is not at the end of the year. Interim audit is done in the middle of the year. Company uses this when they want to know their financial position during the year, like for quarterly or half yearly reporting. Okay, next is continuous audit. Continuous audit means auditor check the accounts regularly instead of just one. Okay, this is usually done in big companies with many daily transactions. It helps to catch mistakes early. Now last one is limited review audit. That is, limited review audit is not full audit. It is just a quick check of accounts to give a brief report. It is mostly done for the listed companies to show quarterly results. It saves time and but it doesn't give a full opinion like a regular audit. Okay. Now next is scope wise classification of audit, that is complete audit. It covers all the business aspects, and partial audit is it is limited for specific areas. Detailed audit is examines transaction from recording to final financial impact. It goes in detail. Okay. Last one is subject matter wise classification of audit, that is cost audit, management audit. You can just read it. Okay. So that's all for today's topic. We have now completed 6.1. In the next video, we will be moving to 6.2, and I will be sharing the PDF notes in the WhatsApp or Telegram group. So make sure you are part of both. Till then, keep revising, stay consistent, and I will see you in the next class. Thank you.